All right, superstar traders, welcome back again. And I've got just one more pair for you. Okay. Don't mind me. I've got amazing setups that I want to be sharing with you. Okay. So this is more or less another video to share with you my trade setups for the week. All right. And of course, I'll be dropping like five of these videos, okay, on five different pairs. Okay. So in this video, I'm going to be showing you my setup on AUDCHF, that is the Australian dollar against the Swiss franc. All right, and I'll be showing you what I see in the chart. So let's quickly go over to the chart. Let's see what we have there. Okay, amazing. So on the chart here, if you look at it on the weekly time frame, okay, if you look at it first on the weekly time frame on the chart, you'd notice that price had been respecting a long-standing trend line, okay? A very long-standing trend line, right? So there was a first touch here, there was a second touch here. Apparently, perhaps in the future, okay? Perhaps in the future, we should most likely see a fall, all right, to make a third touch before prices will begin to go up, okay? So that's actually a long term view, okay? But for now, what do we expect and what do we see? So for now, on the weekly time frame, using the CCI indicator to find momentum, what I basically could find is the fact that there is bullish momentum, okay? There is bullish momentum on the weekly time frame, which simply means that the bulls are dominating, okay? The bulls are dominating, the bulls are in power, and these just give a final bullish confirmation just this week. All right, it's about giving a final bullish confirmation just this week. Okay, so I have that in place that we probably would see bullish rain or bullish takeover on AUDCHF this week. Okay, so I'm going to scale down to the daily time frame. And on the daily time frame, I'm also going to try to check out the momentum and what is happening in the market. All right, the momentum still favors the buyers. Okay, the momentum still favors the buyers. Already there is a confirmation somewhere around this level here. If you watch, there's a confirmation somewhere around this level here. But then we've seen prices actually move all along as consolidating or choppy market. But that notwithstanding, but because of the bullish movement, the bullish confirmation I see on the weekly time frame, I'll try as much as I can to see if I could find bullish opportunities when I scale down to the lower time frame. Okay, so first and foremost on the daily time frame, I am putting up this trend line, marking it as a support area where we could possibly see this begin to bounce off. Another reason why I am doing that is because around this trend line now that I have just drawn, if this is truly going to be a second bounce on that trend line, all right, it simply means that I have already seen some bullish engulfing patterns playing out there. Can you see that? Bullish engulfing pattern. We saw this bullish candle here completely engulfing the last candle and the previous candles behind it. That simply tells us that most likely the bulls are now ready for business. All right. And so let's forget this old choppy market and that the bulls are now in and they are willing to take prices even further above. Right. So my drawing trend line might not be too early a prediction to make, right? Although it is too early to predict that this is a second swing point, okay? It might be too early to make, but of course, yes, finding a bullish engulfing pattern and also finding the momentum on the weekly and daily time frame telling you that bulls are dominant in the market goes to show you that most likely we can have some bulls locking around here, to buyers locking around here to take prices upward. So let's scale down to the 4 hourly time frame. Now on the 4 hourly time frame is where we begin to see very interesting things, guys. On the 4 hourly time frame, we begin to see very, 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 very interesting things. And what are those things that we begin to see? All right. So apparently, let me start here. Okay. Apparently, we've seen prices moving in the usual market structure, which is what the lower low, the lower high, the lower low, of course, the lower high, another lower low, equal high, telling you that prices are not willing to go up, lower low, right? And then, of course, almost equal high, prices dropped again. And then this trend obviously continued, okay? This trend obviously continued, okay? Let me see. All right. Okay, sorry about that. Let me quickly see. All right, I think this is better. All right, so we can see that price significantly had been going bearish all along, okay? If you watch, this is more or less a bearish market structure, all right? We cannot even just deny it. The blind can even see that this is a bearish market structure, all right? But then somewhere around this point here, which I am zooming in, something began to happen, which is where the story gets even more interesting. All right, so somewhere around here, we saw a liquidity sweep, okay? We saw a buy side liquidity sweep, okay? Sorry, we saw a sell side liquidity sweep. Sorry about that. We saw a sell side liquidity sweep. And not only that, then we saw a shift in market structure, all right? We saw a shift in market structure. Mm. All right. So we saw a shift in market structure. Now, before that shift in market structure began to play out, okay, before we had this major shift in market structure, we then had the first shift here, okay, we had the first shift in market structure here before the major swing point was effectively cleared out, okay? So it simply most likely means that we could consider this level here, all right? We could consider this level here as our structural liquidity, okay? But we're not just going to finalize. This level here also presents itself as a structural liquidity, okay? So we are going to validate the both of them, and then we will choose which one of them actually works best for us, okay? So that notwithstanding, all right, it is not enough for us now to begin to say that, oh, look, the buyers are now willing and ready to take these prices even further up. By the way, let me even see the momentum we find. So the momentum we find is still a buy momentum, but it seems like there is a little bearish retracement, okay, before the bulls will now begin to come in to take prices even further above, right? So let me put that aside. So what we're going to do now, our task is not so complete. We've seen a liquidity sweep, a change in market structure. We've seen, of course, we've seen the structural liquidity. Now let's verify. Of course, the structural liquidity should be strategically placed around just somewhere around the 50% Fibonacci level, okay? So this is the major market sweep that we had. So I'm going to consider this zone here, okay? So you can see this zone here. And of course, this structural liquidity here is sitting pretty well on the 50% Fibonacci retracement area. So I'm going to be considering this zone as my structural liquidity, but there is a problem with that structural liquidity. The problem with that structural liquidity is that it did not purge any other liquidity up above it. All right. But that notwithstanding, so this trade setup that I am about to share with you is looking dicey, but of course, it's still going to most likely play out if we are patient and we can also use some other confluences. Okay. So what am I going to be doing? I expect that this liquidity here be swept and then prices come into this other block here. So this is my 4 hourly point of interest, okay? This is my 4 hourly point of interest. By the way, we can swing a little further to the 1 hourly point, 1 hourly time frame, and on the 1 hourly time frame, we would most likely get to find what to do, okay? So yes. On the 1 hourly time frame, this is what we find. All right, a sweep of liquidity, a change in market structure, and then of course prices came here. Okay, it even double tapped twice. Okay, double tapped twice, and then began to go back up. So obviously, what I am simply going to be doing All right. What I am simply going to be doing is find a way to place my buy limit trade somewhere around this level here, right? My stop loss might be a little big, but there's no problem. All right. My stop loss is just about 18 pips. Okay. My stop loss is just about 18 pips, and then I can be targeting this high. So this can give me a 1:3 risk to reward. All right. So if we find prices come into this hourly point of interest, which is the other block that we've marked out, what we can then basically do is to scale down to the 1 hourly time frame, and then we can use maybe more other confluences to begin to find out. For those of you who can use the for those of you who can use the volume footprint, yes, you can use that. If you want to also use the CCI, all right, I've got a video fully made on the CCI, which you can use to confirm this trade when it comes to our point of interest. And not only that, for those of you that can also use the RSI, the stochastics, don't be deceived, they all work, especially when prices come into your point of interest. All right. So yeah, this is my view and my setup on AUDCHF. All right. Let me know your thoughts in the comment section, and also do not forget to like and share this video. Okay, at least that's all I'm asking for. If you're new and you want to trade with the best community and the best broker, all you simply have to do is go to the description of this video. You're going to find a link to our website, or you'll find a link to open a live trading account. Once you do that, I'm going to personally reach out to you, or one of my colleagues is going to reach out to you, and we can work out something and you start trading with our premium signal group. Okay. So thank you so much and see you in the next video. Bye for now.